October, 7:55 in the morning. So pre-market open, so we're looking at Thursday night's close, and we have swapped contracts now. I've gone and looked at the May 2015 chart rather than November, because obviously that's coming up to the cash month, and obviously it's better to look on the forward months. So we'll start with the continuation chart, the monthly chart of the May contract. We've got that on the chart in front of us, and you can see here that we found support here at a low here of 112. We've had this big green candle here, reversing the fall that we saw in in September, now October obviously. We've broken through 120, we closed last night 120.75. On here, I do not see much resistance until we get up here at 140, which is 2008 swing high here. Go down to the weekly chart, and you can see here quite clearly this 140 stands out as a low here made in 2011, and you can see that there's more or less clear space above if the market wants to run that way at the present moment. Also, you're interested to see here this big Mazuba candle here, this red candle here. We're now looking to break that at the present moment, so we reverse that as well. So quite bullish price action at the present moment. Obviously now come back in the daily chart. Obviously we've been watching the 60-day moving average. This is the 6-day moving average, the 20 and the 5 on the May contract, as I keep saying, and we try and predict here what kind of move we can see at the present moment. Obviously what we've got here, we've got a 5-day crossing the 60-day moving average. We had a funny little breakout here. We broke out above and then we broke below the 6-day on this contract. So we try and put some numbers behind where we could see prices go. Move 1 here, 2, 3, I'd look to see first target up here at 135, and then up to 140, which is that swing low on the weekly chart, and a high here of wave 5 if we get momentum up to 145. I'll just put down these sort of my plan here that I've come out with on this daily chart here. This has got the Fibonacci running over it as well. So we've got a 30% retracement of the whole move. The whole move has been £55 a tonne from a high here of 168. So wave 1 has been to 121 from a low of 12. Wave 2 is a pullback to 117. Wave 3, I'm looking at a £14.50 to £15 a tonne move. Now wave 3 should be an aggressive move, sort of good price action. So I want to see sort of over the next sort of 3 or 4 weeks prices continue to rise to go up to test this Fibonacci 3 and obviously this 131 to 135 range. We then should see a pullback, as obviously as long as the pullback doesn't come out and take a low, these previous lows here. I then would like to see a final wave 5 up to 146. So that's putting an Elliott wave count on here. We've got confirmation with Fibonacci, and also if you run a 100-day and 150-day moving average, they come in at 130 roughly and 140. So we've got sort of 3 main indicators giving us targets. In validation of this move, I would not like to see this to the 120 taken out, 121 this last swing high on a closing basis. So I would think that we're looking for an aggressive move upwards. We've got our targets in place, we've got our plan in place. Obviously we just monitor it now. Any deviation that will give us warnings that we're looking then to come back to test this breakout of this 60-day moving average and probably go back in a sideways price action. So obviously what we've done is we've negated the downtrend at the moment. At the moment we're in a sort of breakout points, possible sideways price action. If we hit the first target, that gives us an indication that we're on for a new a bounce, and these will give us our targets for the bounce. Then we pop down into the US market, and you see, funny enough, they're exactly having the same at the moment. Last night closing, just breaking through the 6-day moving average. Be interested to see how their market reacts in next week on the same basis. On the Aussie rate market, got me excited 2 weeks ago because obviously we saw quite an aggressive breakout as we have done on the wheat market, but then you can see how prices quickly retreated and broke below the 6-day, and now have come up to test it again on the underside. And this is what I'm worrying about on the wheat market. If we see a failure of that first move, we could quickly come back into this. And obviously you can see now these moving averages are beginning to flatten out at the 60-day, and what we're going into is a sideways price action, and that could last for some months now. And obviously we've got, higher lows and lower, this high is higher than that one, but it's not higher than that one. So we sort of got a sideways trend. So obviously all action on the UK wheat market. Keep a close eye on it and see whether we get this confirmation, this up move, targets in place, and also the invalidation. And I'll put a note this time next week. Thanks for watching.